We're on the precipice of the largest transfer of wealth in history, the Great Wealth Transfer, and that's because the baby boomers were a successful and entrepreneurial generation, and over the 2040s and 50s they will hand down over £5.5 trillion in the UK alone to the next generation, and for comparison in the United States over $50 trillion, and believe you me, the government wants a cut of that money. Part of what the Labour Party are doing and what the previous Conservative administration were doing is the secret tax known as fiscal drag. The first £325,000 of your estate can be handed on with nil rate tax, that's the nil rate band. But that's been frozen since 2009. Had it gone up with house prices, it would now be over £800,000. So by not moving the threshold with the times, more people are dragged into tax. It's the same thing that's been happening with income tax, which the thresholds are currently frozen. So with inflation and general growth, more people are dragged into higher rates of tax. So in this video, we're going to discuss the Labour budget, because in that budget, they have increased inheritance tax and sent farmers marching on London, led by notorious farmer Jeremy Clarkson. And also what you can do about it, because as Roy Jenkins said, the Labour Chancellor in the 1980s, inheritance tax is a voluntary tax. There are still many solutions that you can use to mitigate it. So, the budget. I'm going to keep this fairly high level because what I'm about to say is brain melting. The nil rate band has been frozen until 2030, so fiscal drag. Second of all, the residence nil rate band, that's the top up of up to £175,000, taking the total to 500,000, 325 plus 175, if you're passing your home on to your children. The residence nil rate band has been frozen until 2030, so fiscal drag. Lastly, for estates worth more than £2 million, the residence nil rate band is tapered away. That £2 million threshold has been frozen until 2030, so fiscal drag. If you ever see someone holding a pitchfork and covered in lamb mucus, chances are you're looking at a farmer, hopefully. The second big change is to do with inheritance tax on farmers. Farmers are the lifeblood of society, but they've been hammered for years. After Brexit, they had problems with their subsidies, selling goods abroad, and also ever-increasing fertiliser costs. Well, now they contend with the so-called tractor tax. That is a cap on agricultural relief to £1 million, with a 50% relief thereafter. But the government says that actually, if you include all the thresholds, a farm should have £3 million typically. But that's unrealistic, because that assumes everything falls into the right place. For a start, the £1 million is not transferable between spouses. So the first spouse would have to die and leave £1 million worth to someone else to run the farm with the surviving spouse in order to use up their relief. It also assumes that they're married and there's two nil rate bands, and that they have kids and there's a residential nil rate band. So there's a lot of assumptions to get the full relief. In fact, a recent study showed that maybe 76% of farms would be affected by this. And what will it bring into the Treasury? About £1.8 billion over 5 years. That compares to a national debt of £2.8 trillion. So it's not scratching the surface. Third, business property relief. Business property relief was brought in by a Labour government in the 1970s. The idea was that a small business could be killed by inheritance tax. So such property was exempted from inheritance tax. And you now have other packaged products like AIM shares. The AIM market sits below the main market, companies like Fevertree, which are exempt from inheritance tax if you hold them for 2 years. The idea is to encourage investment in smaller companies. Well, for the AIM market, they will get only 20% relief. No £1 million allowance. For unquoted shares, they will get a £1 million allowance, but above that, it will revert to the standard 50% relief. And the total of agricultural relief and business property relief is to be £1 million overall. So, what does this do for small businesses, and particularly, what does it do for the AIM market? The last one I'm going to talk about is the biggest one, and that is pensions. For a long time, pensions have been IHT exempt, and that means that we as advisors have put them to the back end in terms of the drawdown strategy. Because they're IHT exempt, best to leave that until last and use the assets in the estate first, the ones that will be subject to IHT, like ISAs. However, the government has turned that on its head. From 2027, pensions will be included in your estate for inheritance tax purposes. And that creates a problem because for those with a pension dying over 75, that pension can now be subject to income tax and inheritance tax, which means the tax could be over 80% overall. You could destroy your pension by leaving it to someone over the age of 75. Now, to be clear, pensions are still very effective for your own needs. They're good in terms of the funding, the uplift that you get, and if you draw down on it to support your retirement, that's all fine. But if you die with a pension, you can expect to pay significant taxes as a result of that budget. So for planning purposes, what hasn't changed? The 7-year rule remains in place. You can gift something, and so long as you live for 7 years, it's out of your estate, unless it's a gift with reservation, i.e. you've reserved a benefit in it. A good example of that is where someone gifts their house to their children and continues to live in it. That doesn't leave their estate because it's a gift with reservation. In order to get around that, you'd have to pay them the market rent to live there, which is a good deal for them. Also, you've got things like trusts. You can gift into a trust. You've still got the 7-year rule, but that allows you to retain control or access to some extent to the capital and or income. Then you've got things like agricultural and business relief. We've discussed the thresholds. They've changed to some extent. And you've got things like the annual gifting exemption of £3,000. It doubles up to £6,000 if you haven't used the previous year. Or if you gift excess income that you don't need for your lifestyle, all of that is out of your estate on day one. So I hope that's useful.